All right, boys. Hey, I got an interesting situation here. We want to know if it's normal for banks to go really deep into your financial history. This person, I'll pop up her problem. This is on the main real estate subreddit. But first, this can be brought to you by Mr. Chris Rooney, home expert.
Retirement is your time to enjoy life and do what you love. If your current home doesn't fit this new chapter, it might be time to consider downsizing. And here's why. Number one, save money. A smaller house, smaller bills to free up your budget. Number two, less maintenance. A smaller home means less upkeep, giving you more time to have fun. Number three, simplify life. Downsizing can make your life easier, especially if you have health or mobility concerns. And number four, use your equity. Many homeowners have significant home equity. Buy less, spend more for fun. I'm Chris Rooney. I'm here to help.
Well, there it was.
In the background.
There it was, Andy. I'm Chris Rooney. I'm totally trying to copy him now. That's just crazy.
It's not copying, Chris. It's just more of I think it's a better way to communicate with consumers. I just do. I think I'm part of it too. Like when I'm looking at boats or looking at whatever and I'm shopping, I kind of like the new way they present stuff to us. Just quick snap, bam, boom, to the point.
Interest rates.
We should run that one in November.
It was spooky. I want to see that again, by the way.
Want to know what's next for mortgage rates?
That's awesome.
That should be on every one of our videos.
That's awesome.
All right, boys, here we go. Is it normal for banks to go through your entire transaction history on your checking account when you are applying for a mortgage loan? The person doing the loan just asked me why I sent a couple $100 to a family member.
Yep. Everything. You have to understand everything that you do, probably 90 days prior to that transaction is going to be scrutinized. And they're going to, and if it's off, it's like, hey, why'd you pay Andy Prasky $200? And well, I went to fantasy football. You have to explain that because they might think that you have a loan with Andy and it's $200 a month that you cannot afford if you have a loan at a certain amount. So they're going to check it out and go deep. I'm telling you,
it's not a normal pat down. This is a full cavity search when they when you get into doing the mortgage stuff. Because think about this: a bank's perspective, they sit there and say, "Why does this person want our money? Why do they need our money? Are they setting us up to get screwed?" That's the I would say that's kind of the underwriter's mentality behind the scenes. Well, where'd this money go? How did it go there? And I don't think they look back to when you're in, I don't know, 10th grade when you got your first checking account. I think they look back at least, 6 months, 6 weeks, whatever it is. And depending on your credit score, they may have to go back farther. They're looking for
90 days.
Yeah, right. And they're looking for history or patterns of history that are bad that they may want to avoid, meaning that you may not make good decisions financially and that they may not want to take the risk on you as a lender giving money. So that's why, people right now, Chris, you hear this all the time. Oh, there's going to be a big housing boom. There's whatever. I go, you that say that have not recently gotten a loan and had to go through the scrutiny of being qualified and asset verification and where does every dollar go and how do you make your money and how long have you been working there? And I mean, it's very difficult, but yet refreshing at the same time, because now we have a kind of like up in Canada, they did the same thing where all of a sudden they didn't offer mortgages unless you could put 20% down. They didn't want to have a bunch of foreclosures. So if you financially couldn't handle the down payment, they didn't want to have loans, at least on a government level, that would be able to, put everybody in a bad spot. So they only want to have high equity, Now, does that cool the market? Yes. Does it make it a little bit long? It delays gratification for a buyer. So let's say you only have 5% down. It's going to take you another year or so to catch up to get that 20%, or maybe you borrow like we were just talking about or whatever from a family member, mom and dad, whatever. But it gets down to the point of where they look at every dollar, where it came from, where it goes to, and can you afford to perform?
I think it's interesting too, that the better off you are, usually the more scrutiny there is too. Yeah. I always have this example of a single gal that I had that made $180,000 a year. This is probably 10 years ago, 180,000, so which was great money. $180,000 a year. She was buying something that was $420,000, and she was putting $180,000 down. Okay, and so she didn't have to qualify for a little over $200,000, and they just took her through the ringer, and she had great credit rating as well. And then there's other people that have 3.5% down FHA loan, might have had a little bankruptcy issue about 4 years ago, and they just fly through. the system. So it just kind of depends. I mean, are you W-2, employee? Are you 1099? And so they're going to look and check into everything, and it is just what it is. You just got to deal with it.
Yeah.
That's why I think it's really crazy. These people, and nowadays we're seeing in our market where people are shopping lenders all the time. If you've ever applied for a loan, you get, because the credit card company or the credit companies sell out your name, and then all of a sudden you're getting 20 calls from people. And they're like, I can do that for 5%. Oh my God, your credit's great. We'll get it for 4%. And everyone's kind of fighting over it. And people are going from place to place. And, you've got to kind of restart it all over. And I'll tell you, if that happens, again, go to your agent. Make sure that your agent knows what the heck you're doing, because they can probably seen a lot of these things and know what's good and what's bad, and how you can kind of discern, if it's a deal or something that you just want to stay away from.